In today's video, we're going to look into a topic that might ruffle a few feathers, especially among those who are die-hard proponents of index fund investing. Many investors love index funds, and there's a prevailing notion out there that investing in index funds is the holy grail, the guaranteed way to build wealth over time. But let me tell you something, investing in index funds won't necessarily make you rich. And in this video, I'm going to explain why. I'm going to give you everything you need to know about index investing, the good and the bad. First off, we'll go over exactly what index investing is. Then I'm going to give you 5 reasons why index investing won't make you rich. And to finish off, I'll explain how I managed to double the value of my pension in less than 6 months by moving away from index funds. Before we really start the video, I want you to learn and understand these 5 reasons why index investing won't make you rich, what I'm about to get to. Because if you do that, you give yourself the opportunity to build real wealth, and who knows, maybe even become financially independent before your 60s or your 70s. Imagine spending more quality time with the people you love, more holidays, etc., etc. Let's clarify what an index fund is. An index fund is a type of mutual fund or exchange traded fund that tracks a specific market index, such as the S&P 500. And in case you're not sure, the S&P 500 is 500 of the top companies over in the United States. So essentially, when you invest into an index fund, you're buying a piece of the entire market rather than selecting individual stocks. Don't get me wrong, index funds have the benefits. They offer diversification, low fees, and they're a great option for passive investors who don't want to spend their days analysing individual stocks. I personally love index funds and have been investing into my index fund every single month since mid-2019. But here's the thing, while index funds can provide decent returns over the long term, they're not going to make you rich. And here's why. Reason number 1, average returns. Going back to 2019, I'd done serious research on index investing. I spent 6 months reading a book literally every week. I watched YouTube videos, listened to podcasts. Long story short, I put the work in. And when it came time to pick my fund, I felt confident that I fully understood what index investing was. And looking back on historical data, I felt confident that I could achieve at least 7% returns on average every year for the next few decades. And at the time, you were getting less than 1% from your savings account in your high street bank. So for me, index investing was a no-brainer. Yes, the stock market has historically delivered average annual returns of around 7 to 10%, and this goes back more than 100 years. But here's the thing, average returns won't make you rich. Yes, you'll see your money grow over time, but it's not going to fly up. If you invest a decent amount, like £1,000 every month for like 40 years, yes, you're going to be rich. But me starting at 35, that would mean I'd be rich at 75-year-old. I don't know about you, but personally, I want to build wealth before my 70s. To become truly wealthy, you need above average returns. You need those investments that deliver exponential growth. And unfortunately, index funds are designed to deliver average returns. Nothing more, nothing less. Reason 2, lack of control. Next on the list is control, or should I say the lack of control. I made a decision in November 23 to sell 50% of my index funds, my pension. Instead of just giving all the control to the fund manager, I took some control over my investments. I bought 2 stocks that helped me double my pension, my overall SIP, in less than 6 months. And I'll go into these stocks in greater detail later in the video. When you invest in index funds, you're essentially handing control of your investment, all of your decisions to the market. You have no say in which stocks are included in the index or when adjustments are made. This lack of control can be frustrating, especially during periods of market volatility when you might want to make strategic adjustments to your portfolio. On the flip side, you might prefer the simplicity of index investing. One thing I can tell you about index investing is that it removes any unwanted emotions, and this suits many investors. You invest X amount in your index fund per month and maybe check on your fund once or twice a year. Reason 3, it takes too long. I touched on this point earlier. Index investing can make you rich if you have the discipline to invest for like 40 years. Maybe this is a bit dramatic. Maybe you end up investing for 20 years and this gives you a very decent pot of money at the end. Let's put the numbers into a compound interest calculator. Let us say you invest £1,000 per calendar month for 20 years and you average 8% returns per year. This would give you £589,020, which is a significant amount of money. But I wouldn't say this would make you rich. That's all I'm getting at with this video. Let's add another 20 years with the same figures. So that's 1,000 invested every month for 40 years with an average return of 8%. In this case, you would end up with 3.4 million. Now you're rich, but again, this takes too long. Reason 4, no guarantees. There are no guarantees with any investing, and it's the same for index investing. Just be careful when listening to some of the experts when they talk about index investing. Many of them talk about 8 to 10% returns as though it's a guarantee, but we don't know what the future holds, and there is no guarantee that us investors have the spare money to invest into an index fund every single month, 20 years or even longer. By the way, I do believe you can achieve 8 to 10% by tracking certain indexes. I'm just labouring the point that this is not a guarantee. Reason 5, inflation. Inflation has been bad in the UK over the last few years, and the same for many countries around the world. Once you fully understand how bad inflation is and has been in recent years, my feeling is that it makes you realise that the current financial system is broken and needs fixing. Let us say we do achieve 8% returns in our index fund over the next 20 years, and we are able to invest 1,000 per calendar month every month during that period. This is just an example. This is good, but it's not that good when you look deeper into it, because you might be getting 8% returns, but inflation is probably in and around 8%. So in real terms, your money is not growing, and basically you're just treading water. This might sound a bit negative, but things like inflation have to be taken into account when us investors are trying to build wealth. These reasons are why index funds won't make you rich. The investors pushing this narrative won't have built their wealth from index investing, in my humble opinion. They will have become rich with businesses and then reallocated some of the profit into index funds. So what's the alternative? Well, if you want to build real wealth, you need to think outside the box. You need to be willing to take calculated risks and to invest in innovative companies with disruptive technologies, to seek out opportunities that have the potential to deliver above average returns. Look at investors like Cathie Wood and Michael Saylor, investors with real credibility who are investing with the future in mind, because the future is coming and it's coming fast. Now, I'm not saying you should abandon index funds completely. They still have a place in a well-diversified portfolio. They definitely have a place in my portfolio. But if your goal is to achieve financial freedom, you need to be willing to explore other avenues of investment. Again, in my humble opinion. I do feel quite bad with this video being so negative, so I want to finish on a positive note and tell you how I doubled the value of my pension in less than 6 months. I'm very bullish on Bitcoin, and I feel it's part of the solution to the current broken financial system. Back in November 23, I wanted more exposure to Bitcoin. To do this, I sold half of my index funds and put 25% in the Coinbase stock and 25% in the MicroStrategy stock. This decision was a good one. My pension doubled in around 5 months. So that's 100% return in less than 6 months. This is what can happen when you take some calculated risks. I've done the research on these two stocks and went for it. When Bitcoin gets to a certain price, I'll sell some of the Coinbase and MicroStrategy stock and put it back into index funds. This is the plan. But I'll be keeping some money aside for innovative companies, and I'm going to be keeping an eye on investors like Cathie Wood. This is the way I'm thinking as an investor in 2024. But what if you're not sure what to invest into? Well, if you look below, I've got you covered with a video that has my top 5 investments for 2024. You might not agree with some of my points about index investing. I just wanted you to get thinking about the good and the bad, because there are positives and negatives to every type of investing. What you go with is personal to you, and it will be based on your risk tolerance and your goals, your financial goals. I really hope you've taken some value from this video and you do well with your investing, very well. That's it for now. Thanks for taking the time to watch this video.